Good morning to all. So today we saw income from salaries. Under income tax, the 5 heads of income already you know. That is salary income, income from house property, income from capital gain, income from business or profession, and income from other sources. So under direct tax, that is income includes the 5 heads. So what is income from salary? Any remuneration paid by an employer to his employee is consideration of his service is called salary, or otherwise the service rendered by the particular person. Regarding this, they get the income from those who are give a service to the particular employee. So the employer give a remuneration to the employee for their service. That is called as income from salary. Now let us see the important points regarding salaries. So what is salary? Every kind of remuneration, whether the person is highly or lowly placed. Salary and pension received from foreign government. So the pension is also included in salary income. There should be a employer and employee relationship. So the employer give a service or give the work to the employee. The employee give a service to their employer. Regarding this, they get the remuneration from the employer. Then profit or any remuneration received by the employee relationship. Next one, any compensation received by widow of employees is not taxable under this head. Pension received by an employee. Salary of a member of parliament, that is MP, is not taxable under the head. Salary received by a partner is not chargeable to tax. So either the salary received by the MP or salary received by the partner is not included under the head income from salary. Then family pension received by an employee is not taxable under the head. Family pension, that is pension is included in salary income. So if an employee after retirement they getting the pension from their government or any private concern, that is that the pension received by the particular employer or particular assessee is included in salary. At the same time, the pension or family pension received by the employer's family. So after death of the employee, after death of the assessee, the employer's family may receive the income or receive the pension from their employer or government. That is not included in the salary income. That is pension is salary income, but family pension is not included in salary income. The family pension is included in income from other sources under the head. Okay. Now salary under section 17 subsection 1. What are the term included in salary means? Wages, any annuity of pension, gratuity, any fee, commissions, perquisites or profit in lieu of salary, leave salary, ESI, employer's contribution in excess of 12% of salary, the aggregate of all sums of transferred balance, contribution by central governments. So these are the through this eight items, they get the amount by the employee, means that includes in salary. Now let us see the different forms of salary. What are the different forms in salary? Leave salary received by the employee is taxable if he enhances after retirement is exempted. Then compensation for retrenchment of employee is taxable. During retrenchment, either by the employer or employer is either by the employer, they get the compensation from the employer by the employee is taxable. Then fees and commission received by the employer. If any service apart from their regular service, they get the amount from employer regarding fees and commission is also received by the employee is taxable. Then bonus paid by the employer to employee is also taxable. Any death cum retirement gratuity received by the employee is exempted under section 10. That is a certain limitation. We will see later. Pension received by employee is taxable under the head salary. Annuity received by an employee from his employer is taxable. So whether leave salary or compensation received, fees or commission received, bonus paid by the employer, any death or gratuity, pension, annuity. So we have to see separately later. Then during the calculation of salary income, we should concentrate allowances. So allowances are divided into three categories. So allowances are taxable allowance, partly taxable allowance, and fully exempted allowance. So what is allowances? Allowances means payment in cash made by the employer to his employee other than salary is called allowances. It is fixed sum of money paid regularly in addition to salary. So some government employees may receive basic DA something so extra. So that means after basic they may be called as allowances. So three types of allowances are there: taxable allowances exempted up to specified limit, fully exempted allowance. What are the allowances including taxable allowances? So number one is dearness allowance, fixed medical allowance, tiffin allowance, servant allowance, non-practicing allowance, hill allowance, warden or proctor allowance, deputation allowance, overtime allowance, city compensatory allowance, hearty allowance, project allowance, and marriage allowance. These are the allowances are taxable in all the hands of employees. Now let us see the allowances exempt up to specified limit. So under this, the first one is HRA. So house rent allowances. So house rent allowance is granted by the employee to meet the payment of rent is exempt from tax. So the exemption amount is we have three provisions. One is actual rent is received. Number two, excess rent paid over 10% of salary. The third one is if the accommodation is situated in metropolitan city, 50% of salary, or other places it is called as 40% of salary. So again I repeat it, these are the provisions for exemption. That is, actual rent is received, rent paid minus 10% of salary, 40% or 50% of salary. If the house is situated in metropolitan, 50% of salary, or otherwise 40% of salary is allowed. So out of three provisions, the least amount is exempted. What is taxable HRA means? Actual HRA received minus the exempted amounts. The remaining balance is taxable HRA. So if suppose the associate having the own house means at the same time they received HRA means the total HRA is fully taxable. The next partly taxable allowance is entertainment allowance. What is entertainment allowance? The allowances given by the employer to the employer for their benefits. That is the least of the following exempt from tax only for government employees. So if suppose the private employee received the entertainment allowance from their employer means fully taxable. Only the exemption is allowed only government employees. The least of the following is exempted. Here three provisions. Number one is actual HRA received, then absolute limit rupees 5,000, then 20% of basic salary. So out of three things, the least amount is exempted. So maximum 5,000 is exempted. The remaining allowance is taxable. Now let us see the special allowances exempted under section 10 subsection 14. Travelling allowances granted is exempted up to the utilization of such amount. Daily allowance is exempted up to utilization. What do you mean by utilization? If suppose the daily allowance is allowed by the employee is 100 rupees, but the employees use only rupees 80 means the remaining 20 rupees is taxable. So out of this all allowances regarding these calculations. Now conveyance allowance is exempted up to utilization, helper allowance, academic allowance, uniform allowance. So uniform, for example, if the government give the police to the uniform allowance for rupees 5,000, but the police may be used only rupees 4,000 means the 4,000 is exempted, the 1,000 is taxable. Are you able to understand? Special allowance is up to utilization value. The remaining balance is taxable. Once again I repeat it. What are the special allowance? Travelling allowance, daily allowance, conveyance allowance, helper allowance, academic allowance, uniform allowance. Now let us see the fully exempted allowance. What are the fully exempted allowance? Number one is foreign allowance. This allowance is paid by the government to Indian citizens outside India for rendering service abroad, that is foreign allowance, fully exempt from tax. So on behalf of our government, they may be worked with in foreign, they get the allowance that is fully exempted. Next one is sumptuary allowance. The allowance is given to High Court and Supreme Court judges. So only the allowance is permitted by the government to the High Court and Supreme Court judges. That allowance is fully exempt from tax. Allowances from UN, United Nations Organization. Allowances given by UNO to its employees are fully exempt from tax. All the member of UNO, they may be received allowances that is fully exempt from tax. The next one is per diem allowance. This allowance is given for the use of hotel, boarding and lodging facilitated to an employee. This allowance is fully exempt from tax. So these are all the fully exempt allowances. So we can saw taxable allowance, partly taxable allowance or taxable allowance at a specified limit. And last one is fully exempted allowance. Now let us see the salary in detail. Salary includes basic salary, allowances, perquisites, profit in lieu of salary. Then all the things should be added, that is called as gross salary. Then less deductions. So for salary income, we have a deductions for standard deduction for government employees. During the assessment year 25 to 26, the standard deduction is 50,000. Next assessment it should be go for 75,000. Then less entertainment allowance exemption, HRA exemption, remaining called as taxable salary. Thank you.